because no one trusts treasuries any longer. And that's the truth of it. And you can see that. I know it's only been a couple of days, but recently we've seen the 30-year treasury go up and the dollar go down. Now, normally they're supposed to move together. I mean, you would think that the the U.S. dollar, the global reserve currency, the epicenter of trust, right? If interest rates go up for whatever reason, usually a strong economy, you're going to see interest rates start to go higher, get fear of inflation or whatever it may be. But as interest rates go higher in the dollar, it usually would be more demand for return. And so people would flood into the dollar. The dollar should go up. We're seeing interest rates go up and the dollar go down. That's an ominous sign. Now, 2 days does not make a trend, but if you continue to see the dollar go down and rates go up, that is further proof that the world is tired of holding U.S. treasuries, not only because of the fiscal and monetary hurdles that we have to overcome, which seem insurmountable, maybe are mathematically, but also the lack of trust in our foreign policy and in what happens if you end up on the wrong side. Absolutely. I mean, they're everything about the BRICS is in a cooperative manner. It is the carrot, not the stick. When was the last time you saw China in a war? Their Shanghai Cooperation Organization, which now Iran is part of, is also the largest regional financial and military organization on the planet, the Shanghai Cooperation Organization, and even the Belt Road Initiative. It's not perfect, and you could find flaws in any plan, but what are they doing? China goes and industrializes underdeveloped countries, allows them to unlock the value of all of their natural resources, build infrastructure to create a vibrant economy, and to bring those commodities and natural resources to the market. What does China get out of it? A piece of the action. What do the countries get? Industrialization in a cooperative manner. We're not going there and like we did in Venezuela or like we did in any parts of the world where the U.S. or any of the Western influences come in and do things by force. That's not how this goes with them. And I think that is what they're trying to win. And by saying you don't hear them saying we're here to eliminate the dollar, but we're here to provide choices, freedom. Otherwise you're beholden to a handful of very large companies like Visa or MasterCard or very large banks or the U.S. dollar and the Federal Reserve. Now these countries have options. And I think that is exactly what they're trying to say is that, hey, we can do this in a friendly, cooperative manner where we both benefit, right? You get what you need, we get what we need, and together we grow stronger. And it's happening. And I think people ignore and dismiss it because it takes so long, Michelle. Mm-hmm. You and I had our first discussion on this, I don't know, 6 years ago.
2021.
2025, 4 years ago, 5 years ago, and it takes a long time, but you can see it's becoming more
2022.
And more.
I take that back. 2022.
Well, it's becoming more and more legitimate. But look, there's a lot of things like the Trump administration that pops up that slows the narrative or doesn't derail it, but certainly can put a hidden variable or an extra twist and a turn.
And we'll get into.
I don't know about immediately, but what it does is every single piece of the track that they put into place, the continued financial integration just starts to challenge the system. I mean, it's kind of like, when you had cassette tapes come out, after 8-track tapes came out. Well, the 8 tracks didn't die overnight, but it certainly aided to their demise. And maybe that's a bad analogy. Demise isn't really what I'm getting at here. It's alternatives. What does that mean to the system? What it probably means is much higher inflation, much higher interest rates here in the West, much less demand for our dollar and for our treasury. What does that mean in a system as over-leveraged as it is? And sure, it could happen once it's fully implemented. It could be quick. But it's less about what the Western countries will do, and more so when you look at the Belt Road Initiative as it is, it represents 75% of human population and 50% of global GDP before industrialization. So when you add that together, along with the countries in the BRICS, like we've often said, you're dealing with 3 of the 4 largest nuclear arsenals. You're dealing with the majority of the manufacturing capacity in the world, the majority of the rare earth production and refining, the majority of the natural resource production and demand, it seems, and now settlement systems that will price it in local currencies or in the yuan, for one, payment rails, and all of these things together, as they become more refined, I mean, they have to have an impact. No one could tell you, will it be, gradual then suddenly, or little by little then all at once? Maybe. But I think it will have a profound effect. And ultimately, the question to be asked will, what will fill the vacuum for the dollar and for the treasury and for the Western system that we've all become accustomed to? It will definitely affect it. And over time, probably much more. But you get to a group when you have, if full integration, Saudi Arabia, United Arab Emirates, India, Russia, China, South Africa, and the list goes on and on and on. It's not like military even becomes an option. And so what is your option? And in a system that is largely based on trust, when we do everything we can, it seems to, whether it be through foreign policy or fiscal irresponsibility and brain-dead monetary policy, to further incentivize said countries to find a backdoor, a alternative to a system that really hasn't focused on fairness and equality, but more so on keeping the Western system alive and setting its own rules. So, I think normalcy and recency bias prevails, but I look at it as something that is becoming very substantial, one system at a time, one currency at a time, one settlement system at a time, and we'll wake up one day to find a different world. Don't know what it looks like, but I'm sure it's going to have a profound impact over time, because no one trusts treasuries any longer, and that's the truth of it. And you can see that. I know it's only been a couple of days, but recently we've seen the 30-year treasury go up and the dollar go down. Now, normally they're supposed to move together. I mean, you would think that the Western, the U.S. dollar, the global reserve currency, the epicenter of trust, right? If interest rates go up for whatever reason, usually a strong economy, you're going to see interest rates start to go higher, get fear of inflation or whatever it may be. But as interest rates go higher in the dollar, it usually would be more demand for return. And so people would flood into the dollar. The dollar should go up. We're seeing interest rates go up and the dollar go down. That's an ominous sign. Now, 2 days does not make a trend, but if you continue to see the dollar go down and rates go up, that is further proof that the world is tired of holding U.S. treasuries, not only because of the fiscal and monetary hurdles that we have to overcome, which seem insurmountable, maybe are mathematically, but also the lack of trust in our foreign policy and in what happens if you end up on the wrong side. Like, maybe this is why India and Saudi Arabia are straddling, if you will, and very much so. Saudi Arabia, differently than India as a charter member of BRICS, India, but they both seem to straddle both sides of the fence, placating to the West while still being heavily involved in the BRICS. You look at Saudi Arabia, who hasn't made a formal decision yet, is a charter member of Enbridge, which would be one of the catalysts to hurting the dollar more than anything. And so I think that it's becoming very real. It's just a matter of, how does this all play out? I don't think anybody knows, but I think it's something that is becoming very difficult for the West to do much about. And I guess we'll have to see how many new countries are admitted into the system or into the new BRICS platform. But I think everything that they are doing, from payment rails to precious metals, where it is a system that it's an asset that requires no counterparty fulfillment. It's an asset that has value independent of any counterparty, no counterparty risk if it's held in your own possession. And we're seeing that. We're seeing the central banks buy more gold than at any time ever, year over year over year, 1,000 tons plus 3 years in a row. The central bank said that they bought 16 tons the first quarter, and the World Gold Council said you're lying by a factor of 15. Now, you've actually bought 15 times more than you said. Why are you lying? And the same thing, Goldman Sachs said the same thing about China. I think it was 4.5 times understated, or whatever the number is. But the central banks are reporting voluntarily, and they're underreporting purposely. And if you watch, you can see the massive purchasing by the central banks that isn't stopping. And here again, massive second quarter purchases by the central bank, huge second quarter purchases by the central banks, if we believe them that the numbers are what they say. But remember, all of this purchasing we've seen this year, Michelle, has happened as the price has gotten clubbed. And so what do they know about where this is ultimately going when they continue to purchase hand over fist at a time when the price has done anything but go up in dollars? Certainly it's gone up in Japanese yen, but they're buying it, and they're buying it at a level that is unlike anything anyone's ever seen, and they're doing it and not being honest about it, as we have found out. So far this quarter, the second quarter, we've already seen a 407% increase quarter over quarter, or 231 tons. So year to date, they bought 345 tons, and that they've claimed. And Poland has bought 82 tons. And that's the same Poland, by the way, where they asked Adam Glapinski, I've said this before, why is Poland buying so much gold? Because we buy gold, and the Central Bank of Poland buys gold because when someone pulls the power to the global financial system, one that is dominated by electronic accounting records, we want to be able to be prepared for even the most unlikely circumstances. Now, something to that extent, you have the head of the Polish Central Bank buying more than anyone, including China, for 3 years in a row, and they say they're buying it for other reasons than most would think, because when someone pulls the power on the system. By the way, Adam Glapinski also has gone on record recently and said that these pullbacks that we've seen so far this year has been nothing but an opportunity for Poland to add more gold to their reserves, as we can see it at 82 tons that we know for sure have been purchased this year. So the biggest money in the world is accumulating gold as if they know something. And who's doing it here at home? And that's the thing that, I get some flack sometimes, Michelle. People say, well, it's not leaving. Some leaves COMEX, some doesn't. Is it just the central banks playing, or the commercial banks playing games? My answer to that is no, because they never did this before. They never, ever stood for delivery. Less than 1% of contracts did. They would cash settle, they would exit the trade, or they would roll forward. Now they want numbered bars in their account. And my question is, much like Tether buying a huge amount of gold so far this year, continuing, in fact, Tether's bought more gold than anyone but Poland for the last 2 years. Who's doing it? And could it be the Exchange Stabilization Fund, the cent, who understands gold? Could he be the one saying to the banks, we want to stay at arm's length, we don't want our footprints in the snow, but you're going to buy a ton of gold for us, you're going to put it into the COMEX and leave it in your house account, we'll get it when we want it. We don't have to worry about any shenanigans on the COMEX or the U.S. Treasury. And if we pull it all out, well, they'll be able to follow the footsteps. Let's leave it there. And it makes the analysts in this industry say, well, couldn't it just be the banks playing a game? No, it's not, because they do the game with paper and warrants, not with physical delivery. And I think the same thing should be asked about Tether. We can talk about that if you want, but the bottom line is that gold is being rewoven into the monetary system quietly here and far more overtly across the globe. I think the West has guarded that right and that privilege for so many years. Yeah, of course it does. And if you are hell-bent on doing that, the first thing you do is play the game against the West and stand for delivery, quietly, methodically play the long game and just wait everybody out. And they are doing that. We know that China produces more gold than anyone in the world, second most producer of silver. We've highlighted how they fly all around the world buying doré and concentrate, using the Western price, paying twice what the West will, and bringing it back and refining it from Peru and from Mexico. We see the deals they've struck all around the world for, with gold mines and infrastructure within the Belt Road, building up the ability to withdraw these natural commodities and take possession of it. If that was your intention, and you stand for delivery in a way that you're being caught at least 2 or 3 times by entities like the IMF or the World Gold Council, or recently by Goldman Sachs, looking at the import-export numbers, recognizing it's a voluntary admission to report it, but having it accumulated by People's Liberation Army and proxy banks, and standing for delivery, playing the Western game. you guys are stupid enough to suppress the price. We'll play your game. And in fact, we'll incentivize you to do it by having a year-long 10 to 15% premium on Western silver. In other words, we'll pay you 10, 12, 15% more to buy your silver. You just ship it to us, and you'll make a gazillion dollars. Same thing with gold, $85, $90, $100 premium on gold. So ship it. Now, arbitrage doesn't last long. Normally, the traders fill that gap quickly. Keeps lasting. They're playing the long game. And so you play against the Western foolishness of, as Rick Rule says, they're trading 200 times more silver than is deliverable every day on COMEX. Well, at some point, someone says, I don't want paper anymore. But if your intention, people say, why don't they just buy it all? Because if they did that, the markets would cease and they'd get nothing, squadouche. Instead, they play the long game. And people in this country cannot allow their minds to play the long game. So they look at it as dismissive. But China sure can, and so can the other countries within the BRICS framework. So they are using the Western price against us. At the same time they're accumulating, they're building the rails, the vaults, the settlement systems, and the exchanges to do this. The big one being the exchanges that are same-day settlement in another currency. We see the others in Singapore and United Arab Emirates that are same-day settlement in dollars. Same-day settlement is big enough. You put it in another currency and you very well are beginning to change the narrative. And then you look at China's playing the long game. They bought the LME, the London Metals Exchange, the base metals. They build warehouses in China to house these metals. They're playing the long game, using the suppression of Western paper prices to create an environment, the West has, of supporting the strength, illusionary strength of a bond market and of a currency that wouldn't otherwise be so strong. And we can see that by the manipulations that we see with the Western bond market and the Japanese bond market, whereby if price settlement were to really be allowed to happen through buying and selling, not suppression and loaning to the repo market and all of these things that we see, the shenanigans we see right now, then price discovery would be far different. Interest rates would be far higher, and our indebtedness would create a much bigger problem, and things would accelerate. They're playing a long game. And they, at some point, will be able, I think, through the majority of not only the world's commodities, but also the infrastructure that prices things appropriately, to provide that really, really substantive and very for real alternative. Doesn't mean it's going to kill the dollar, but what it does mean is it's going to change the way that everything works, and it's going to change the lifestyle of the people in this country. That's for sure.